Welcome to the latest edition of International Tax News. I'm Doug McHoney, PwC's International Tax Services Global Leader. In this edition, we cover selected tax updates from around the world, including my favorite topic, Pillar 2. If you would like to go in depth on similar topics, check out the Cross-Border Tax Talks podcast, in video on YouTube or in audio wherever you find your podcasts. Now turning to our current edition. First, on December 5th, the German Federal Ministry of Finance published a second draft of the German Pillar 2 Tax Amendment Act. The ministry requested feedback by January 31st, 2025, as part of the consultation process. In addition to the aspects previously included in the first draft, this second draft includes further amendments by implementing the OECD administrative guidance from June 2024. The draft act also proposes repealing several international tax provisions, including the license barrier rule, a rule foreseeing the non-deduction of so-called special business expenses, as well as the CFC taxation rules for participation in investment companies. Next, Guernsey recently approved legislation to implement the OECD's Pillar 2 rules effective from January 1st, 2025. Local guidance notes have not yet been released. As part of the legislation, Guernsey implemented a qualified domestic minimum top-up tax and income inclusion rule, which followed the Globe model rules with some modifications. The corporate income tax rate in Guernsey will remain at 0%, with 10% and 20% applying to certain activities. Finally, on December 12, 2024, the Cyprus House of Representatives passed the global minimum tax of MNE groups and large-scale domestic groups law, transposing into Cyprus national law the relevant Pillar 2 EU directive issued on December 14, 2022. In order for the legislative process to be completed, the law will need to be published in the Government Gazette, which is expected imminently. The law aligns with the EU directive, including additional text to account for certain elements of the OECD administrative guidance that has been released to date. The law includes an income inclusion rule effective as from 2024, an undertax profit rule effective as from 2025, and the Cyprus domestic minimum top-up tax also effective as from 2025. Thank you for reading PwC's International Tax News. I look forward to speaking with you again on the next edition and on the next episode of the Cross-Border Tax Talks podcast.